Trading doesn't work. 92% of day traders trying to scalp the market lose money. Only 8% are successful. Out of the 8%, only 2% of the day trading public make money on a consistent basis. And these are professional traders. How are we supposed to compete with that? Trying to predict the peak of an uptrend or the bottom of a dip? It's like finding a needle in a haystack. You also need to be an expert chartist to understand where price will go next. Spending hours working out which technical indicator to use. The system has been rigged for us to fail. Think about it. Every time you open a position, somebody has to play the other side. With only 8% of day traders making a profit, investors with large capital can take the risk. But you will be wrong 92% of the time. This is why the richest 1% continue to get richer. Well, if trading isn't an option, then what should you do with your investment? Invest in stocks. Like the richest 1%, compound interest is the second best asset an investor has. The best asset is time. The sooner you can get started, the longer compound interest can work in your favor. Start investing instead of trading by clicking the link on this video or below in the description to find out how you can buy instead of trade shares online. If I said that when investing, the price of a stock doesn't matter, would that make investing easy? Let me explain. For the last 60 years, the top 500 companies in the US economy has grown on average between 7 to 10% each year. The price of the S&P, short name for the 500, was around 1,350 in 2007. If you'd have invested £10,000 back then, your investment would have been worth £16,968 today. This is where compound interest comes in. In the last example, it was just a one-off investment. Hold for 10 years and get a 69.68% return on your investment. Not too shabby, better than any bank. But if I reinvested my gains each year and bought more stock, my £10,000 could have been millions. The key is starting now. Click the link on the video or the link in the description to see how to get started. Have I mentioned that you will also be paid a dividend 3 times per year? Is this starting to sound interesting? And here is the best bit. Trading is risky. Investing, by contrast, is easy. Set your investing goal. Mine, for example, is £30,000 in 5 years, which equates to £500 a month. About £16 per day. Roughly the same I spend on smoking. And for that reason, I am now going to stop smoking and start investing the savings. You know, I said earlier that you do not need to worry about the price. This is still true. You are a buy and hold investor. If the price is high one month, I get 3 shares. Next month, the price is lower, I get 5 shares for my £500. Repeat until I decide to retire. I'm 38 now, so time isn't on my side. I know what you're thinking. What if the stock market crashes? It has, many times before, and always rebounds higher than before the crash. The latest being the internet bubble bursting in the late 2007. The S&P dropped from 1,548 to a low of 725 and has since rocketed back up to 2,425, way past the 1,548 that it was before the drop. In the last 10 years now, those very same companies are trading higher than ever before. Google, Microsoft, Amazon, eBay. The beauty of owning stocks is that if the price goes down, yes, in principle you lose money, but you only realize a loss if you sell. And as you are a long-term investor, you can ride out any dip of the market through diversification. By owning a number of stocks across different sectors, you can mitigate the losses of one against the other, all the while collecting dividend payments to reinvest and benefit from compound interest. Click the link on this video or the link in the description to learn what stocks you should hold. Here's a preview of what I'll cover once you've clicked the link. The ideal number of stocks to hold in total, the stocks I plan to hold in detail, an overview of the share platform, how to identify a good company to hold, instructions on how to follow my journey. Like this video now and show some love in the comments. See you on the other side.